real estate taxes that I wrote off to 10.
Yeah.
Wait, I didn't like that.
90,000 to 10.
I have multiple pieces of property.
Yeah.
So that's $45,000 that I'm paying the government now.
Right.
So I think you have to, it's going to mean more to some than others. I don't live my life through what's in my wallet.
You didn't sell your home. You didn't move to another state.
And I think that your home is a long view.
When things are hot right now, is the sense I'm getting, right? You know, the Fed's cut rates. We're into this cycle.
Mm-hmm.
What are we thinking about in 6 months or a year? I mean, does that demand still out there? Do you see that long line out your door?
Absolutely. You know, look, I think that we have room for a big recovery, and we have room for growth because, as Carol said, there's only so much real estate and floor to be built or converted or whatever. And so buyers need to have a long view. And I push my buyers today, buy more. I know you really want to only spend this much, but why? You want to have a second child. Reach. This is the time, and refinance again. So that's my advice, is buy long and stay and buy more today than less tomorrow.
Before you go, I want to bring up, there's a story we kind of teed up in the introduction. This was written by our James Tarmy about the New York City townhouse with an 83-foot climbing wall listing for $20 million. It's the Minetta Lane home. It's a local landmark, and as our James Tarmy mentioned, it can now be yours, obviously, if you can afford it. But I do think about old buildings, as you said, you know, with a history, with people who lived in them, or some really cool stuff to it, whether it's a pool, whether it's a climbing wall, what have you. Is there something we've noticed in properties where there's even just more and more being added in terms of amenities?
Absolutely. I mean, listen, the West Village, I just sold a transaction. I did a transaction on Perry Street earlier this year, and that is like Mecca for location of the West Village, right down the street from Sex and the City townhouse. And, you know, it hadn't been on the market for 45 years.
Right.
So they paid $135,000 for it.
Love that.
We had 8 offers in 8 days, and it went $2 million over the asking price. And most of the people that wanted to make those offers wanted to spend $7 million and then flip it for 26.
Unbelievable.
And that would have been possible.
Ah, love that. That's such a great way to wrap up. Louise, as always, so appreciate it. Thank you. Louise Phillips Forbes, real estate broker at Brown Harris Stevens, here in our interactive broker studio, working on properties for Steve and Carol to come to New York City.
Be able to noose him here.
We might be waiting for a while.
Work out some immigration things or whatever it is. I don't know what his work visa.
I think I'm happy that I'm going before Kamala than after.
There might have been questions. All right, Louise, thank you so much. We are waiting for the Vice President, Kamala Harris. She is expected to step up to the podium in Pittsburgh, Pennsylvania, make some comments, reveal her economic plan. In the meantime, quick check on what's going on with the trade on this Wednesday. Over to Charlie Pellet we go.
Here's what's going on. We've got the Dow, the S&P, little change right now, down by about 0.2% on the S&P. Retreating from yesterday's record, we are down by 11 points. We got the Dow Jones Industrial Average down 266 now, a decline of 0.6%. NASDAQ will call that flat on the day, unchanged, with the Russell 2000 index of small cap shares being hit especially hard today, down by 1%. 10-year 3.78%, the 2-year 3.55%. Spot gold up 0.1%, 26.61 the ounce, and West Texas Intermediate crude oil down 2.6%, 69.72 per barrel of WTI. Bottom line here, U.S. stocks trading lower now across the board. Southwest Airlines ending nearly a third of its flights through Atlanta in an effort to eliminate unprofitable routes. It is the latest move by the carrier to improve operations amid pressure from activist investor Elliott Investment Management. Southwest down now by 4.1%. The other big player at Atlanta, Delta, it is up now by 2%. Recapping, S&P down 12, a decline of 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Keeping a watch, certainly on the markets for us there. Charlie Pellet, Carol Master, along with Stephen Carroll, host of Bloomberg Daybreak Europe, here in for Tim. Just got about 33 minutes to go until we wrap up the trading session. Something we talk about with investors a lot, who's going to end up in the White House come November here in the United States. We are awaiting the Vice President to make some comments about her economic plan. People want more details.
Yeah, she's making a speech at the Economic Club of Pittsburgh, and we're just waiting to see the Vice President take to the podium there. But this idea of outlining her economic vision, initiatives to bolster domestic manufacturing is what we're expecting as well. This is, of course, in response to the remarks we had from Donald Trump yesterday, and the defining issue of this election, direction on the economy, where each of the candidates wants to take things at this very critical moment for the economy as well. So we're going to be looking forward to hearing an address which will try and address this issue of Kamala Harris and her willingness to work with business leaders to grow the economy, but also protecting workers' wages and benefits. So different narratives that we'll be trying to tease out where that kind of balance is going to be struck by the Vice President in her approach to the economy in this campaign as well.
As our team has been reporting out, the event really to amplify how Harris feels about her initiatives that she wants to stress should she be in the White House, what her vision is for the economy, because voters consistently say that they don't know enough about her policies. And we've seen former President Donald Trump ramping up his messaging in terms, we just talked about tax policy, implications for real estate, what it might mean potentially. But I think it's also timely considering the story we talked about earlier with our Beth Coet about how a lot of employees don't feel like they are participating in this economy. They're not benefiting like some of the 1%, 2%, 3%ers, if you will, in the U.S. economy. So what is it that potentially the Vice President could lay out should she be in the Oval Office where there would be potentially more benefits to more Americans?
And it's worth remembering that the economic playbook is not the typical one that we're seeing in this election from either candidate. Really, this is not the typical lines that we see the parties fall on. So the detail is what's really important here, and the emphasis that the Vice President is going to place on these competing demands of the economy, what it's going to mean for workers, what it's going to mean for businesses as well. When Donald Trump spoke yesterday in Georgia, he was talking about using tax incentives and tariffs to force foreign companies to shift more production to the United States in a bid to transform the U.S. economy as well. So this is something that we're looking for the detail. We're looking for the clearer elements of that vision as Kamala Harris set to lay them out in Pittsburgh.
Commonality between the two candidates, man, they are in the swing states, the states that ultimately will probably decide that outcome come November. So whether it's Pennsylvania, whether it's Georgia, you see for Kamala Harris, the backdrop will be very important. There she is in Pittsburgh, a city with a proud industrial past, lots of ties obviously to the steel industry, organized labor. This is a speech many would say, I guess, that it is, her comments to the worker, blue-collar workers in particular, reaching out to that group of electorate that maybe have not yet decided or are not yet on Team Harris.
Yeah, and those perhaps that had been, unhappy with how Joe Biden's handling the economy as well. How will Kamala Harris distinguish herself from her colleague in the White House over the past term in office as well? So this is all part of the key message we're expecting. Let's listen in to Kamala Harris just taking to the stage at the Pittsburgh Economic Club of Pittsburgh in Pennsylvania. Vice President Kamala Harris just greeting her supporters there on stage, and she's getting up to the podium now. Let's listen in.
Thank you all. Thank you. Please have a seat. Please have a seat. Andrea, thank you so very much for that beautiful introduction and for your leadership. It really is my honor to be with you today. Thank you. And thank you to Risa and the Economic Club of Pittsburgh for hosting us today. And I also want to thank Mayor Gainey for being here. Mayor, you greet me each time I come to Pittsburgh. I thank you so very much for that, and your leadership. Thank you. So, hello, friends. Let's get started. Okay. So we gather at a moment of great consequence. In this election, I believe we have an extraordinary opportunity to make our middle class the engine of America's prosperity, to build a stronger economy where everyone, everywhere, has a chance to pursue their dreams and aspirations, and to ensure that the United States of America continues to out-innovate and out-compete the world. Over the past 3.5 years, we have taken major steps forward to recover from the public health and economic crisis we inherited. Inflation has dropped faster here than the rest of the developed world. Unemployment is near record low levels. We have created almost 740,000 manufacturing jobs, including 650 at the battery manufacturing plant over in Turtle Creek. And we have supported another 15,000 jobs at Montgomery Locks. So these are local, great examples of the work that we have achieved thus far. And last week, for the first time, of course, in 4.5 years, the Federal Reserve cut interest rates, which will make it just a little easier for families to buy a home or a car or just pay down their credit card bill. But let's be clear, for all these positive steps, the cost of living in America is still just too high. You know it, and I know it. And that was true long before the pandemic hit. Many Americans who aspire to own a home are unable to save enough for a down payment on a house, and starting to think that maybe home ownership is just outside of their reach. Folks who live in factory towns and in rural communities, who have lost jobs, are wondering if those jobs will ever come back. Many Americans are worried about how they'll afford the prescription medication they depend on. All of this is happening at a time when many of the biggest corporations continue to make record profits while wages have not kept up pace. I understand the pressures of making ends meet. I grew up in a middle-class family, and while we were more fortunate than many, I still remember my mother sitting at that yellow Formica table, late at night, cup of tea in hand, with a pile of bills in front of her, just trying to make sure that she paid them off by the end of the month. Like so many Americans, just trying to make it all work. Every day, millions of Americans are sitting around their own kitchen tables and facing their own financial pressures. Because over the past several decades, our economy has grown better and better for those at the very top, and increasingly difficult for those trying to attain, build, and hold on to a middle-class life. In many ways, this is what this election is all about. The American people face a choice between two fundamentally very different paths for our economy. I intend to chart a new way forward and grow America's middle class. Donald Trump intends to take America backward to the failed policies of the past. He has no intention to grow our middle class. He's only interested in making life better for himself and people like himself, the wealthiest of Americans. You can see it spelled out in his economic agenda. An agenda that gives trillions of dollars in tax cuts to billionaires and the biggest corporations, while raising taxes on the middle class by almost $4,000 a year, slashing overtime pay, throwing tens of millions of Americans off of health care, and cutting Social Security and Medicare. In sum, his agenda would weaken the economy and hurt working people and the middle class. You see, for Donald Trump, our economy works best if it works for those who own the big skyscrapers, not those who actually build them, not those who wire them, not those who mop the floors, well, I have a very different vision. I have a very different vision for our economy. I believe we need to grow our middle class and make sure our economy works for everyone, for people like the people in the neighborhood where I grew up and the hardworking Americans I meet every day across our nation. So I call my vision the opportunity economy. And it's about making sure everyone can find a job and more, and more. Because frankly, having a job, I believe, in our ambition and aspiration should be baseline. And we should aspire and have the ambition and plan to do more. I want Americans and families to be able to not just get by, but be able to get ahead. To thrive, be able to thrive. I don't want you to have to worry about making your monthly rent if your car breaks down. I want you to be able to save up for your child's education, to take a nice vacation from time to time. I want you to be able to buy Christmas presents for your loved ones without feeling anxious when you're looking at your bank statement. I want you to be able to build some wealth, not just for yourself, but also for your children and your grandchildren, intergenerational wealth. And here's the beauty of it all. We know how to build an economy like that. We do know how to unlock strong shared economic growth for the American people. History has shown it time and again. When we invest in those things that strengthen the middle class, manufacturing, housing, healthcare, education, small businesses, and our communities, we grow our economy and catalyze the entire country to succeed. I have pledged that building a strong middle class will be a defining goal of my presidency. And the reason but let me tell you, the reason is not about politics and it's not about ideology. From my perspective, it's just common sense. It's just common sense. It's actually what works. When the middle class is strong, America is strong. And we can build a stronger middle class. The American economy, we know this here. The American economy is the most powerful force for innovation and wealth creation in human history. We just need to move past the failed policies that we have proven don't work. And like generations before us, let us be inspired by what is possible. As president, I will be grounded in my fundamental values of fairness, dignity, and opportunity. And I promise you, I will be pragmatic in my approach. I will engage in what Franklin Roosevelt called bold, persistent experimentation. Because I believe we shouldn't be constrained by ideology and instead should seek practical solutions to problems, realistic assessments of what is working and what is not, applying metrics to our analysis, applying facts to our analysis, and stay focused then not only on the crises at hand, but on our big goals, on what's best for America over the long term. And part of being pragmatic means taking good ideas from wherever they come. Listen, you all know my career. Andrea shared it with you. I am a devout public servant. I also know the limitations of government. I've always been and will always be, and be clear about this, I've always been and will always be a strong supporter of workers and unions. And I also believe we need to engage those who create most of the jobs in America. Look, I'm a capitalist. I believe in free and fair markets. I believe in consistent and transparent rules of the road to create a stable business environment. And I know the power of American innovation. I've been working with entrepreneurs and business owners my whole career. And I believe companies need to play by the rules. Respect the rights of workers and unions, and abide by fair competition. And if they don't, I will hold them accountable. And if anyone has a question about that, just look at my record as Attorney General. Look at my record in California, taking on the big banks for predatory lending, taking on big healthcare companies for conspiring to jack up prices, taking on a big for-profit college for scamming veterans and students. At the same time, I believe that most companies are working hard to do the right thing by their customers and the employees who depend on them. And we must work with them to grow our economy. I believe an active partnership between government and the private sector is one of the most effective ways to fully unlock economic opportunity. And that is what I will do when I am president. I will target the major barriers to opportunity and remove them. We will identify common sense solutions to help Americans buy a home, start a business, and build wealth. And we will adopt them. So let's start then with the first pillar of an opportunity economy, which is lowering costs. So I made that our top priority for obvious reasons, because if we want the middle class to be the growth engine of our economy, we need to restore basic economic security for middle-class families. To that end, the most practical thing we can do right now is to cut taxes for middle-class families and individuals. And that's what we will do. Under my plan, more than 100 million Americans will get a middle-class tax break. That includes $6,000 for new parents during the first year of their child's life. To help families cover everything from car seats to cribs. We'll also cut the cost of child care and elder care. And finally, give all working people access to paid leave, which will help everyone caring for children, caring for aging parents, and that sandwich generation, which is caring for both. So I have a personal experience with caregiving. I remember being there for my mother when she was diagnosed with cancer, cooking meals for her, taking her to her appointments, just trying to make her comfortable, figuring out which clothes were soft enough that they wouldn't irritate her, and telling her stories to try and make her laugh. I know caregiving is about dignity. It really is. And when we lower the cost and ease the burdens people face, we will not only make it then easier for them to meet their obligations as caregivers, we will also make it more possible for them to go to work and pursue their economic aspirations. And when that happens, our economy as a whole grows stronger. Now, middle class.
All right, everybody, we are, of course, listening to Vice President Kamala Harris. She is in Pittsburgh at the Economic Club of Pittsburgh, laying out her economic plan. A few headlines, but really talking about some of the things we've already heard from her as she makes her way to the White House in hopes of making her way. Talking about that $6,000 tax break for new parents. Also stressing that she believes in capitalism, free markets, rules of the road, I should say, and talking once again, Stephen, about the cost of living being still too high.
Yeah, indeed. And those measures, as you mentioned, the tax break as well, cutting the cost of child and elder care and giving working people access to paid leave, some of the measures that we're hearing Kamala Harris talk about. Let's bring in Bloomberg's Deputy Congressional Editor, Mark Dorning, from our Washington, D.C. Bureau for more. Mike, what did we hear from Kamala Harris in there that perhaps added some meat to the bones of what we know about her economic plan?
So there weren't really new policies, but this is something that's important for her to do because, particularly for undecided swing voters, the economy is something they really care about. And as much as we might think of Kamala Harris as someone we know and has been around as vice president, most Americans barely know her, and they certainly don't have a strong sense of what she believes in terms of economics. So this is just filling in more information, giving people a better sense of her values and priorities when it comes to economics, making the argument for the policies she has already talked about in terms of values and priorities. And perhaps most importantly, that quote that you were mentioning, it jumped out to you, was clearly designed to jump out at others to say, hey, I'm a capitalist. So if you're hearing Trump say, Comrade Kamala, and all these knocks against her, here's another soundbite in her words that you'll probably see on the internet saying, hey, I'm a capitalist, I believe in free markets, and I'm a pragmatist.
You know, what's interesting is our lead up to this, a great story on the Bloomberg, just kind of teeing it all up. And what we were expecting from her is that it made a note that the Harris campaign, preparing a lengthy document explaining her economic vision, according to someone familiar with planning, and did not discuss the unreleased materials. Having said that so far, to be fair, it sounds like these are things that we have heard from Kamala Harris before. And you know, this concept of an opportunity economy, it sounds good. It sounds like a great branding, but the devil is always in the details. And do you feel like we're getting anything more on that front?
Well, I mean, certainly neither Trump nor Kamala Harris are giving us a lot of detail, but the advantage Trump has over her is like he was president for 4 years, so people have some sense of what they're going to get from him. By having this 60-page document that sooner or later will come out, you can see like an argument that tries to put it all together in a cohesive case for a set of policies that reflects values and priorities. And at the end of the day, that's what sort of connects with these undecided voters. They're not like, you know, going over like a J.P. Morgan analyst looking at these things. They just want some better sense of this person and how they see the economy and how they will confront as yet unknown economic problems ahead.
Interesting. Interesting stuff, yeah. And we'll continue to monitor, obviously, the Vice President's comments in Pittsburgh. Mike, thank you so much. Mike Dorning, he's Bloomberg News Deputy Congressional Editor right there in our D.C. bureau. All right, we know investors certainly monitoring things that are going on the campaign trail, and so we've just got about, 6-7 minutes left in today's trade.
Yeah, we sure do. Let's bring in Alan Zafran, his founding partner and co-CEO at IQ Capital from Foster City, California, as we drive to the close here on Bloomberg Radio. So, Alan, look, yesterday was the 41st record for the S&P 500 this year. We're not going to get 42, it looks like. We're down about 0.25% on the S&P 500. What breaks this bull run? What takes us out of this level that we're seeing so many records for stocks?
Thanks for having me on your show. What takes us out of this market is some unexpected event, because when valuations are this high, you just have less room for error. The reality is, I think the Fed has pretty much articulated the soft landing that few people thought they could. And growth is still there, and inflation is moderating. So it's not what you know what you know, and you know what you don't know. It's what you don't know that you don't know that's going to hurt you. If things stay as planned, the market is going to slowly continue to work its way up. Most of the valuation increase in multiples has probably been witnessed. But if earnings can continue to grow at a moderate pace, the markets can plod their way higher from here. So the unexpected is what's going to take us down.
Hey, one thing I want to ask you as we continue to monitor Vice President Kamala Harris there in Pittsburgh, trying to get more details of what the specifics are on when it comes to her economic plan. And to be fair, as our Mike Dorning pointed out, we want more specifics when it comes to what a second term of a Trump White House would be. Having said that, you talk with investors, you guys are investing money. Do you often have your clients, institutional or otherwise, saying, hey, I'm a little confused. I want to know what the economic plans are, or folks just saying, here's what I want to do with my money?
For the most part, we're finding both individual as well as institutional investors are basically focused on economic growth and inflation, because at the end of the day, no matter which administration is in office, let alone which Democrats or Republicans controlling Congress who makes the rules, taxes, inflation, and economic growth are what drive asset values. And so both parties more or less look like we're going to be in an environment where the deficit can continue to grow, and where the biggest differences are sector-wise, whether you're going to focus on traditional energy versus electric vehicles and de-electrification is a big issue of change, or perhaps moderate changes with respect to the healthcare system. But for the most part, the administrations aren't that much apart, other than probably potential tax changes from the TCJA that were imposed during the Trump administration. So we see handfuls of clients that take a let's wait and see what happens with the U.S. presidential election outcome. The reality is the markets move in the end on economic growth, not on who's in the office as the president.
And look, the economic picture pretty solid by all accounts. The OECD forecast out today seeing US GDP rising 2.6% this year, 1.6% next year, though. Where are you on your outlook on a soft landing and your concerns about where growth is going from here?
I think the soft landing has actually been achieved, and you're seeing things like rates have come down now on the long end of the curve, and you're seeing actually refinancing applications have spiked. They've had more. The index on mortgage refinancings is the highest point it's been since April of 2022. So you can begin to see the fact of slower rates rekindling economic growth. Where we come out is you're going to be in a GDP growth environment of 2 to 3%. You are going to be in a higher inflationary environment, closer to 3% per annum than what it was prior to COVID. So what COVID and its saving COVID by printing trillions of dollars has created a higher inflationary environment going forward. And so that ultimately means you probably have moderately higher yields. And that in turn tells you that there's probably less room from here at 20 times forward earnings for the S&P to expand its PE multiple. And therefore, market growth, public equity market growth from here is more dependent on earnings growth than on PE multiple expansion. Hence, to answer my first question, there's less room for error because the likelihood of exceptional additional multiple expansion from here is pretty limited.
All right, sounds like you're also then starting to think about earnings. Is that kind of your next focal point? Just got about 30 seconds here, Alan, real quickly.
Yes, we need to see earnings growth to merit the relatively high multiples that investors continue to pay on the markets. And so if you think the market is trading a little, S&P 500 trading a little over 20 times forward earnings is fully valued, then your expectation, if the multiple holds, is the market grows at the rate of earnings growth. that might be something in the order of 6 to 8% for the next couple of years.
All right.
Not terrible, better than bonds, but not extraordinary.
Yeah, exactly, right? It's a little perspective there. Alan, thank you so much. As always, appreciate you jumping around as we had watching the vice president in Pittsburgh and just some things going on here, keeping us busy on this Wednesday. Alan Zafran, founding partner, co-CEO at IEQ Capital out there on the West Coast. All right, folks, Steve and I heading over to our TV colleagues, counting you down to the closing bell, starting right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through the Closing Bell, a global simulcast. It starts right now. Scarlett Fu, back from wherever she was, joining us here in the TV studio. Carol Masser, still here. Oh, but Tim Stenovic, for some reason, didn't get the memo. Stephen Carroll filling in for him today as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. Stephen, how's it working with Carol today?
Oh, I mean, it's always a dream. As I said, it's day 3 and we're still friends.
We'll see what happens tomorrow. Pressure's on. Having said that, I'm thinking about the chip sector a little bit. Micron Technology, right? That's going to be our focus as it gets ready to report its earnings after the closing bell. Stock's up about 1.8%. Semis outperforming as a whole. Stephen up about 0.7%.
Hey, look, I was excited. We got a 40 and a 41 in terms of record closes. It doesn't look like we're going to get 42, though.
No, it doesn't. I mean, at midday, it looked like there was some potential. You know, the other thing I'm paying attention to, of course, and is the 1-2 punch that we got from China with the broad stimulus measures one day and then the rate cut the next day did very little to carry over into U.S. trading.
No, that's why it's sort of like, what are we waiting for? Is it really going to be jobs? I'm obviously interested in Micron also, but that trade of small caps and mid caps that were kind of outperforming has not really measured up anymore.
Yeah, and I mean, and it gets to this whole idea of sort of what the next catalyst is going to be for this market. If you listen to what our conversation with Dan Suzuki, it does seem to be that maybe it is going to be the start of earnings season once that gets going here in a few weeks.
He's an equity guy. He has to say that, right?
He has to say that, and we should also point out that the earnings season from the last cycle is still not over. Micron earnings scheduled for after the bell, as is from the investment bank Jefferies. But before we get to that, let's walk you through the numbers here on Wall Street. A relatively mixed day here. I'm not sure what you can read into it, but the Dow Jones Industrial Average, no matter which way you cut it, is going to close the day down by more than 200 points, almost 300 points on the day, or about 0.7% as we wait for these numbers to settle. The S&P 500 down roughly about 10 to 11 points, or 0.2%. It looks like the NASDAQ is going to just barely hold on to gains, less than 0.1% gain for the NASDAQ Composite, 0.1% gain for the NASDAQ 100. Your Russell 2000, though, that's your big laggard here on the day, Carol, down about 1.2%.
Yeah, remain a bit of a meh day, if you will. Just you can kind of feel it. But if I look at the S&P 500, folks, most of the names lower today. 369 names losing ground on this Wednesday. 132 to the upside. And Scarlett, you've got 2 unchanged.
Yeah, and that's reflected in the sector performances as well. If you look at the S&P 500 and its 11 industry groups, there's 9 groups that are in the red. And the reason why it doesn't really look like that on the big pizza pie is because tech is up about 0.5%. Utilities also up 0.5%. So what does it say? That the growthiest part of the market and the safest part of the market are both up by 0.5%. Energy, by the way, losing ground by 1.9% as oil prices sink.
You still have pizza on your mind.
I do.
He does. Yeah.
It's going to be a while.
I always have pizza on my mind. All right, let's get to some of the individual gainers. Meta certainly front and center. We've been talking to Ed Ludlow, you guys too, about the new glasses out of Meta. That stock up about 1.3%. We do have Micron crossing. Do we want to go there first?
Yeah, let's do it.
Let's do it.
That's
So Micron fourth quarter adjusted EPS, folks, 6 cents better than the street was expecting, $1.18 coming in. The estimate was $1.12. Fourth quarter adjusted cash flow from operations, $3.41 billion. Slight miss, $363 billion was the street forecast. And fourth quarter adjusted gross margin, guys, 36.5%. That's outperformance. The estimate on the street, 34.7%.
Yeah, I mean, looking pretty solid all around. Of course, the detail that we want to see is where exactly we dig into which bits of the business. What is the HI trade looking like in this front as well?
Yeah, I mean, one thing that people are definitely going to be paying attention to is what it says about it. It's the AI picture, right, for Micron. This is a company that for so long made memory chips and didn't really have a role in the whole AI narrative, and that's slowly changing.
Yeah, taking a look here at first quarter adjusted revenue, it looks to come in about $8.5 billion to $8.9 billion. That is definitely above estimates. But on the flip side, you wind up having some cash flow from operations for the fourth quarter missing estimates. But that looks pretty good.
Yeah, that looks good. And I think this is what everyone's looking for here. It's this idea that, yeah, AI, that memory chips in and of themselves don't have the same sexiness as what NVIDIA is putting out there. But as you build out these data centers and you hear some of these pie-in-the-sky dreams from OpenAI and these massive things they want to build, well, guess what? You need memory in order to do all of that. And so maybe potentially Micron benefits.
All right, so interesting. So we'll continue to keep an eye on it. That stock up 11% here in the aftermarket. All right, I mentioned Meta, of course, their new AI glasses, unveiling new models of its Quest headset. So we've seen that stock off its highs here at the close, up as much as 2.5% today, or almost 2.5%, but finishing with a 1.25% gain. Constellation Energy, man, continues to be among your top gainers in the S&P and NASDAQ 100, just continuing to outperform, up another 3%. Of course, since we got that news that Microsoft going to tap into power, Constellation going to reopen the 3 Mile Island nuclear power plant. I know Constellation Energy, their CEO was on Bloomberg on Monday talking about AI and talking about power. So anyway, continues to be certainly front and center when it comes to investors. Quick check, Intel, also something that investors continue to keep in their radar, up another 3% in today's session. Of course, again, this one we continue to watch to see if ultimately will there be some kind of deal, whether it's Apollo, whether it's Qualcomm, or something else that gets Intel into its next chapter. And just for something different, for those who like sports betting, I got to mention Flutter. It was up as much as 10% in today's session. The company authorizing a share buyback program of up to $5 billion over the next 3 to 4 years, according to a statement. Stephen, that stock finishing the day with a 5% gain.
Yeah, I'm going to take you to car makers for the decliners that we're looking at as well. General Motors, one of those slumping today, down 4.9% at the end of trading there. After Morgan Stanley analyst Anna Jonas warned that cars are too expensive for U.S. consumers and that a price war in China is going to hurt the bottom line there. So even with interest rates coming down, those repayments still too expensive for many consumers, keeping them out of the showrooms too. He also downgraded Ford and Rivian and upgraded dealers, including AutoNations. That's one of the folders.
Have you seen the price of cars out there, Stephen? I don't know what it's like over in your world where you live, but if you go to a lot here,
I don't know. I live in central London. I can't drive. Yeah.
Okay. Yeah. So you got nothing.
Yeah. There's. But look, I know they're expensive because I mean, look, it's one of the things that we're kind of following, and especially people thinking about EVs and where that goes as well. But look, I'm joined by a bunch of style icons, so I want to talk about Stitch Fix as well. Worst slump in 6.
Wait. Obviously you.
This sheen that I see on everyone on the show.
She's like, she looks like she's out of like the fashion magazine or something.
Oh my gosh, that may be the nicest thing you've ever said to me.
Okay, we'll savor it. Don't drink it all at once.
Make him say it again.
Well, hey, look, maybe you guys don't need the help that Stitch Fix offers some people. Personal styling platform shares down 35% at one stage, down almost 40% at the close there as well. They issued weaker forecasts than expected for net revenue and adjusted EBITDA. Props to Yusuf Squali at Truist Securities for getting this pun into his note, talking about material headwinds facing the stock. I liked that. I thought it was a good one. See? Okay, one more for you. On homes, we've been talking about falling home sales, of course. But KB Home, after their results, shares down as we're looking about 5.4% at the end there. They reported earnings per share and net orders for the third quarter fell short of estimates, talking about numbers confirming builder margin pressure as well. This is echoing something that we heard from Lanars last week as well. That's another share in focus for us.
All right, just want to hit on yields real quickly before we go back to Micron for a moment. You're looking at yields sold off across the curve. The front end ended up about 5 basis points and the back end up similar amount. You had a 2-year auction today that went just fine. Nothing to write home about. And we do get another auction tomorrow of 5-year notes, about $70 billion. No, sorry, $44 billion in 7-year notes tomorrow. Today was that 5-year note auction, did just fine. So we'll see. But that curve continues to steepen. Now we're over 20 basis points, a pretty fast re-rating from the inversion that we've seen.
All right, we do want to go back to Micron. Those are the biggest moving shares in after hours trading, up about 9% here. A beat on several key metrics and a fiscal first quarter sales forecast of about $8.7 billion. But I thought more importantly, they talk about this high bandwidth memory chip, which is I guess what all the investors are focused on. That could potentially be the future of this company, and that does appear to be where Micron's forecast is resting on here. So I guess if this is an AI play, a play that of course is a stock that's down 30-something% over the last few months, and maybe potentially this is it.
All right, just watching. Shares of Micron up about 8.5% in the aftermarket. All right, guys, that's a wrap. Our cross-platform coverage. What did he say? Icons of style?
Style icons.
Tim better
Wear
watch
it with
out.
pride.
All right, that's a wrap. Alex is heading out. She's going to probably go do some shopping and build up her wardrobe even more.
She doesn't need to.
Awesome.
That's the point.
She doesn't need to. Scarlett and Romaine continuing on TV, and Stephen and I are going to continue here on Business Week. Guys, have a good evening. Catch us tomorrow, though, our cross-platform coverage. Same time, same place.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Mazur and Tim Stenevec on Bloomberg Radio.
So we're continuing to watch shares of Micron Technology here in the aftermarket, up about 9% here. And we mentioned some of the metrics in terms of the company and some outperformance. But again, seeing investors like what they heard from the company. And this is obviously a little bit of a different chip maker, but definitely with an AI aspect to it.
Yeah, look, largest U.S. maker of computer memory chips as well. And it's the surprisingly strong forecast that's giving a lot of that lift as well. And this has helped as the company's been telling us by demand for artificial intelligence gear. Fiscal first quarter sales are expecting them around $8.7 billion as well. That's, the analyst estimate was $8.3 billion.
That's big outperformance.
So that's exactly. Look, we're looking at something that looks like a pretty big beat for them. Let's bring in Jake Silverman, who's semiconductors analyst at Bloomberg Intelligence, with us here in the Bloomberg Interactive Broker studio. Hey, good to meet you. Nice to have you in studio.
As well.
Talk to us about what your reading is on this. It looks pretty good all round, right?
Yeah, look, I mean, it's definitely encouraging. Coming into the quarter, there were definitely expectations were starting to get a little worse. There was an inventory buildup a little bit at some smartphone and PC customers. And this was partially driven by an anticipation of further price increases, as well as worry about supply being allocated towards data center products. So street estimates are starting to come down, and that's pretty reflected in the stock price over the last couple of months. Last month, I think it was down about 7% or so. So definitely encouraging.
We talked earlier with Ryan Vlastelica, who talked about the HBM high band memory chips that are used in AI processing large language models. And it's kind of their AI business that has been under their radar. It's not something we talk necessarily a lot about. On that, we did have a headline that the company came out and said robust AI demand drove ramp up of data center DRAM products. So how big a business? Give me some context. I want to understand that if I was putting a whiteboard out about the AI players with NVIDIA in really big, bold letters, where does Micron come in?
Yeah, so Micron supplies high bandwidth memory chips. This is a pretty new business for them in the sense that they had pretty de minimis market share prior to, or still even actually, they're growing and they're actually taking share in some of NVIDIA's products. And high bandwidth memory is so crucial for these chips that go into data centers and allow these AI models to actually operate at a high efficiency. So really what's important for Micron is to continue to gain share with NVIDIA, but it's still really early stages for them. They still probably only generated, my guess is something around $300 to $400 million in revenue this quarter versus over 7 points versus 7.
Yeah, their fourth quarter adjusted revenue was, first quarter adjusted revenue, the outlook 8.5 to 8.9 billion. So it's a small business.
Yeah, relatively speaking right now, but it's growing very rapidly. And next year, last quarter, management was talking about multiple $1 billion of revenue. So, again, still not necessarily a super large business relative to the rest of the business, but growing very rapidly.
Yeah, and if they're talking about this ramp up as well, I mean, in terms of capacity for production, is that an issue that the company's going to be facing if they're getting massively increased demand for these very specific and popular technology?
Yeah. That's something that's really important, is that they increase capacity for high bandwidth memory. They talked last quarter about having to increase it this quarter incrementally just to maintain that level of capacity requirement. But they're still playing catch up. And because of that, they're going to have to continue to increase their capacity into next year as well. And that feeds into a pretty increased level of CapEx next year. And that will impact their free cash flow, but important to keep in mind that high bandwidth memory is a higher margin product relative to their standard products.
Help me understand though, Jake. So is this the NVIDIA of tomorrow? So if people are listening saying, okay, this is the one to get in on now, or like,
I think
when we talk about the Blackwell chip, right, of NVIDIA, what are they going after that NVIDIA does currently and kind of seems to own?
Yeah, so the first product that they were supplying into was NVIDIA's H200. That started launching back in calendar of 2Q this year. But we believe they're going to be supplying into NVIDIA's Blackwell solution as well, and potentially some other products like AMD's MI325 and potentially Google's products and potentially Amazon as well.
So it's the heart of what NVIDIA is, right?
Mm-hmm. Blackwell is very important, yeah.
Yeah, so that's what I'm saying. Is it potentially that this company can be?
Well, so they supply an important product, but they do share that market with the leader right now, which is SK Hynix, as well as Samsung, who's trying to still qualify into that product. So Micron will probably have their place in that market, but right now we think that's more likely about low 20% or so market share. So great opportunity for them, but they're still going to have to share that market with multiple incumbents.
Micron's interesting in the sector because it's one of those ones that sort of survived the boom and bust cycles that have existed in it as well. Does that tell us how it's going to be able to position itself for the AI cycle and for how it's going to compete with the likes of SK Hynix?
What it really impacts is they're going to have to be cautious in terms of maintaining that supply-demand discipline, making sure that they don't that there's no overcapacity in the market as we think about 2026 and beyond. Now, we don't know exactly what demand will look like next year, but it seems pretty strong. They're already sold out for 2025 in terms of capacity. So that signals to us that demand remains fairly strong, and as long as that demand remains strong, that we don't really see a risk of overcapacity, at least in the next several years.
So what's the number one question? I'm thinking the analyst call, we're going to start getting more headlines off of that. What is the question that you think must be asked of management?
I think the first questions are really going to center on high bandwidth memory, how they're positioning themselves. I think people are going to want an idea, analysts are going to want an idea of how much revenue they can really generate next year for high bandwidth memory, and how that's going to really impact earnings as well. It'll be interesting to see what management says. We think they'll probably stick to their multiple billions, though.
How does this set us up going into an earnings season? We're going to be hearing from more of these companies as well.
Yeah, no, I think it'll probably give a little bit of confidence in sort of the AI names, but I think this beat, while it was probably driven partially by AI-related products, I think also it talks about standard memory just being fairly strong as well. And then when we think about that, it's not high bandwidth memory, but it's also smartphones and PCs. The demand for those things. Right, those things we have in our pockets and desks.
NVIDIA's up about 1% here too in the aftermarket. All right, gonna leave it there. Listen, so appreciate it. Jake Silverman, semiconductor analyst here at our Bloomberg Intelligence team. Right now on Bloomberg Television and Bloomberg Radio, Bloomberg Technology co-host Ed Ludlow sitting down with the Meta Platform CTO, Andrew Bosworth. Let's listen in.
With the Meta CTO, Andrew Bosworth. Ed.
Television and radio audiences all around the world. We're live in Menlo Park, and I'm with Meta's Chief Technology Officer, Andrew Bosworth. Boz, I understand that over a number of years and at the early outset of Orion, because we've been over the details, I've experienced it, we can talk about that. You basically said to the team, I assign a low percentage chance that this will happen. You've got to this kind of prototype phase, so much so that the stock reacted to it. May I start by asking what percentage chance you assign Orion actually iterating or being engineered towards a consumer product?
Yeah, super high, high 90s.
Super high.
Yeah, no, we already have the next two products in development based on the technology we developed for Orion, and we think this is just a proof of how exciting the future is going to be as these technologies become consumer ready.
You may or may not guess, though, speak to some of the team and know that that's part of the origin story. My understanding is that this is a future behavioral change that humans have to make. Right now I have a smartphone, I have a laptop, and that's the price point you want to come in at. One day Orion or its next generation sibling will be priced at a high-end laptop PC. What is that price point? And is, give me something here. Will I be coming back to Menlo in 10 years and finally looking at it in a consumer form? Or is it something more real than that?
Long before 10 years. I think we're more than 1 year away, less than 10 years away. But we have a very clear line of sight to a consumer product. The price isn't clear to us yet. One of the big things going from a prototype like this is understanding what can we learn that allows us to simplify, or what do we need to keep in future designs, and that's going to control where the price lands. But we really want to get this into a price point, a form factor that not just consumers use it, but developers want to build for it.
The breakthrough in technology is actually in a material, silicon carbide, that allows for all of this in the lenses. How's the supply chain look like for silicon carbide for somebody that wants to do consumer tech?
Yeah, silicon carbide was, the first place we looked for super high index glass that's refractive, and that's really important for what we do for these lenses. I will say it's an incredibly difficult material to produce and to work with. And so we are also looking at multiple different materials that we could use to replicate this functionality, and again, at a hopefully more competitive price point.
I'm trying to sort of think holistically about everything that's happened today. When I moved to California 6 years ago, you were a social media company, and then you got absolutely hammered by the markets for being a very big loss-making unit of a hardware company for the metaverse. Now you're very focused on AI. Which of those is it?
It's all of those. I mean, until earlier this year, Facebook's fundamental AI research group reported to me. And I think it's not a loss, it's an investment. And today you got to see for yourself what that kind of investment can get you. And I think that's one of the things where if you are looking towards the future and you realize these curves kind of overlap one after the other, PC and the internet and phones, there is another curve that's going to happen, and we believe it's spatial computing.
Mark talked about how when it comes to interaction with your AI products, Meta AI, which is now through a generation of Llama 3.2, I think he said 500 million active users. But where are they actively using it?
Well, one of the great advantages that we have is a large and engaged base of consumers who want to use AI, but they want to use it in ways that are really comfortable with them. We already have apps that they're using, WhatsApp, Messenger, Facebook, and Instagram. And so integrating these AI tools into something they already use every day is a way to make it much more accessible and frankly much more useful to them.
But I guess the point of my question is the origin of that user's enthusiasm. Are they people that are principally using WhatsApp, or they're still kind of the legacy Facebook user?
It's across all the surfaces, and the usage differs across each surface. The things that I'm going to ask when I'm on the group chat and I want to ask Meta AI a question turn out to be different than the ones when I'm creating content for Instagram.
For our Bloomberg television and radio audiences worldwide, we're speaking to Meta's Chief Technology Officer, Andrew Bosworth, aka Boz, to the thousands of people that work here. You're a technology guy. Go on your Instagram when you're driving to work in your electric vehicle, you're filming the experience through your Meta Ray-Bans.
That's right.
But loads of people just aren't ready for that. And, what is it about each iteration or generation of hardware you bring out that makes you think, okay, this will be it. This will be the year where consumers start filming the world around them and interacting with an AI, a voice assistant, through the glasses on their face?
Yeah, these things happen slowly and then kind of all at once. When you can replace an existing use case, people can switch very quickly. For me, at least, having Meta AI Assistant on my Ray-Ban Meta glasses has been game-changing, especially because I have young kids who are constantly asking me questions to which I do not know the answer. On the other side, things like using augmented reality glasses to replace your phone, that's going to take a lot longer. We have to build a lot more value there. And that's where the commitment that we have, frankly, from Mark Zuckerberg all the way down is so important.
I was here 24 hours ago, and I was able to try out Orion. I hope the team in New York can pull up the video for those watching on TV. But the frank reality of it is, through the article that I wrote or the piece we put on social media, the world out there cannot get a sense of what that's like until you show them. Is there a way you can bridge it? You said somewhere between a year and 10 years for Orion as a consumer product. But what's your strategy to make people see that this is real?
The good news is full AR isn't the only option. So you take the Ray-Ban Meta glasses that we have, and we've just announced so many new features for today. What if these have a display in them? Maybe it's not a super wide field of view, maybe it's not holograms in space, but it adds to the experience. So there's not just one set of products coming in full AR, there's a whole suite of products coming between here and there.
Boz, I talked about Reality Labs getting, I think I said slammed by the markets, but that was a big preoccupation. the story's changed insofar as like the hardware's popular.
Yeah,
you know,
that's
Meta
right.
Ray-Ban. Dare I say the P word, profitability of some of the things of which you're responsible for?
Yeah, for us, I mean, obviously the major focus is getting this technology to be great, getting it in the hands of people, and like many Silicon Valley companies, focusing on profitability when we've got the scale with the platform that we believe it's capable of.
Part of the Orion experience is that it's like a triumvirate of pieces of hardware.
That's right.
And you have the wrist part, which controls the hand gestures. It's like a left click on a mouse with a computer.
That's right.
And it got me thinking about other areas that you've looked at. So when is the Meta Watch coming?
The neural interface on your wrist is a perfect place to put a watch. We're one so inclined. And it's also a great way to get AI responses and look at your pictures, now that I think about it. So I think we talk about this as a constellation of devices that work together. So whether you have smart AI glasses like these ones, or you have full AR glasses, whether you have a watch or a wristband, when you've got the compute, whether it's on your puck or some other thing, they all work together in concert to deliver this amazing experience.
As we work towards this idea that Meta's an AI company, where do you want to see the investment? A lot's made of how many NVIDIA GPUs Meta's going to make. I think for you, the relationship with Meta's kind of output's a bit different. Where do you want to see the company move a bit quicker?
Very few have benefited as much as we have from Meta's AI investment. I mean, if you think about how we do hand tracking, how we do the SLAM that keeps these things located, how we do not just the assistant on the glasses, but also even the image stabilization we do on the glasses, these are all deep AI systems pioneered by the expert AI teams we have here. In the metaverse, being able to describe a world and having it come to life would really help creators get to the point that we see the metaverse becoming a really rich user-generated world. And so for us, like, we see them as very, very co-aligned in terms of pursuing the same future.
Andrew Bosworth, Boz, Meta Chief Technology Officer, thank you for having us here in Menlo Park and also allowing me to actually test whether the technology works or not. Back to you guys in New York.
Really cool stuff. Ed Ludlow, thank you so much. Ed out there, as he said, in Menlo Park with the CTO of Meta Platforms, Andrew Bosworth. If you missed any of that interview, be sure to check out Bloomberg.com or check out the Bloomberg terminal to catch more. We talk a lot about metaverse, high-tech stuff, but sometimes we talk low-tech and we talk mac and cheese.
And why not? Is the thing.
They're all good.
They are all good, and they can sometimes take you unexpected places. Can you build a dream on mac and cheese? I was trying to think of what the European equivalent is to mac and cheese. It's not.
Do you guys
not such a big
mac
thing.
And cheese?
No, we do, but it's not quite the same
not
scale.
good mac and cheese?
It can be good. I have asked people to bring me back boxes of it from the US before.
We
so
do it
anyway,
well here.
Yeah, look. This is what our next guest has done. She's made mac and cheese part of her brand, part of her business idea, and something that she's built a new career on, and we're thrilled to talk more about it as well. The book that she's written is Mac and Cheese Millionaire, Building a Better Business by Thinking Outside the Box, and its author, Erin Wade, joins us now from Oakland, California. Erin, welcome. Great to talk to you. You went from restaurants to law and back to restaurants. Talk us through that process and how you ended up becoming, the queen of mac and cheese.
Sure. So, I began my career with a huge passion for food and had, cooked in restaurants, but found that it was a really dead-end job. The pay is low, the treatment is not great, so I just did not see a future for myself. So I decided to go to law school and do what generations of lost people with no direction have done, and become a lawyer. But I didn't love it. So I actually got fired. Turns out you're not good at what you don't like doing. And I decided I wanted to create the restaurant that I wish that I could have worked at. So not just was it a love of my family recipe of mac and cheese and wanting to bring that to the market, because I just didn't see that being filled anywhere. There was like pizza restaurants, barbecue, but not mac and cheese. But I really wanted to focus on how do I create the kind of workplace that I wish, the kind of restaurant that I could have worked in, and what do I need to do that?
So what in particular did you want in terms of making it the place that you wanted to work at? What was it that needed to be different?
My book is filled with a lot of trial and error. I think the truth is I didn't know. I knew what I didn't want to do, right? But sometimes it's harder when you haven't had the example set of what you do want to do. So I found that it really came down to three things, which was communication, collaboration, and collective success. And I'm happy to give you examples of, ways that we did all those three things. But that I found was really the secret to our success. And, not only in an industry where the average tenure is, less than 90 days. Our average tenure is 2.5 years, but our profitability was in the top 1% of restaurants. So I'm really, proud of what we achieved.
Yeah, because look, it's a difficult business to get into, and I think if you're going to make a leap of faith into something new, you didn't perhaps pick the clearest or the easiest path to do that. Talk us about getting the first homeroom started.
I mean, haven't you seen the statistics about restaurants that most fail in their first year? I mean, it's daunting. But anyway, go ahead, because it's tough.
No, they do. And I mean, I think that's why actually it makes for such a great business book, because, if we were using these techniques successfully, I mean, it is the hardest industry to make it. So, I really think these ideas can work anywhere. But yeah, I mean, it's crazy. I mean, banks won't even give you loans because it's considered, your odds are better in Las Vegas than investing in a restaurant. But I do think that with sort of, by using these techniques, I think people in all kinds of businesses can beat the odds.
Talk us through the first few months of that business, though. At what point did you know that you were onto something and that was going to take off into something that of course it became a cultish hit?
Yeah, luckily we were packed from, day one, and I really credit it to, frankly, just having an exceptionally good quality product. So, at most restaurants, if they have mac and cheese at all, it is a side dish. It's something that is not paid very much attention to. And for us, this is really the main thing. So, we made each one to order. We used my family recipe. We put nearly a quarter pound of cheese in each portion. So, it's incredibly cheesy. It's fresh. It's made with love and care. And that makes a huge difference versus sitting in a vat somewhere. So I think people were very, very obsessed with the product from day one. But frankly, I think also what we did is created tremendous value surrounding the experience, because I had worked a lot in fine dining, but something that I thought was really lacking in a more casual setting is great design and great service. Those things don't need to cost more. They just need someone to care more. And so, I think that people's perception of value of getting to sit in this really beautifully designed space, getting, some of the best service that they've had in a restaurant while eating, the best version of mac and cheese they've ever had. It's just a winning combo.
I have to say, there's a restaurant in our neighborhood, a local one, family run, and they have an incredible mac and cheese, and we will go there just for the mac and cheese. And there used to be a place downtown, I don't even know if it exists, but that's all it did, and great, cast iron skillets and any kind of varieties of mac and cheese. It is just that food that we just love. What's one of the biggest, what was one of the biggest moments in this process? I feel like everybody who started a business, especially in the restaurant industry, we've all seen The Bear and loved it. But I do wonder where you were, it was either just a huge learning experience, whether from your team, from your workers, I don't know. Tell us.
I have to say, we used a lot of really interesting techniques to engage people in the business. For instance, we're an open book company, and so share our financials and teach financial literacy. And I think that was a huge aha, right? It really unlocks people's potential and power to understand business in a deep way and to feel like they're part of something that's bigger than themselves versus just showing up every day to cook. So, I'd say that's one moment that I'm incredibly proud of. But another is that we used all these techniques of, we had a lot of different tools to be communicating, collaborating, and we actually came up with a solution to sexual harassment, which our staff was experiencing. And I wrote a viral piece in the Washington Post about it. It got adopted by the EEOC. I went to Washington to go testify about it. And it's now used by restaurants and bars all around the world. So, I think that also, frankly, when you tap into the power of a workforce, we were just a small restaurant, but made a difference on a global scale. And I think, I'm incredibly proud of that.
But talk to us a little bit more about that. How you came to realize it's something needed to be done differently. I think it's safe to say that most women have had some degree of sexual harassment, some that is quote unquote harmless. I don't even know that I should use that word, that I'm probably going to be spacked by my sisters. No, I know, but I guess where we grow up and just are like, okay, I got to get through because I love my job, I want to keep going, that kind of thing. And then there's ones that, nope, you're going to court because somebody has to pay for something. But tell us about how you approached it and you knew you had to kind of maybe change it or have some kind of impact, and why. I mean, the why.
Yeah, you know, honestly, I was approached by a number of female servers at the restaurant who all were complaining. And honestly, they said they'd worked at a ton of places and this had happened everywhere. This was just the first time that they thought maybe someone would actually do something about it. And so I did what I usually do when someone brings up a problem, which is include them in the solution to it. So, you know, we came up with a system that our entire staff that wanted to participate did participate in creating it. And I think the reason it's so effective is that honestly, it really sort of honors people wherever they are. It's like basically a color-coded system. And when someone experiences something with that color, they just report the color and an action is taken. So, you know, for instance, a yellow is just you get a bad vibe at a table. You just say, hey, I've got a yellow at table 2 and a manager will take it over for you. And an orange is you have a bad feeling plus, let's say, an ambiguous comment, something like, I like your shirt. You know, depending on who says that to you and how they say it to you, it might feel totally benign or aggressive. And so same deal. Someone just goes to a manager and says, hey, I've got an orange at table 2, and the manager takes it over. And with a red, that's someone saying something overtly sexual or touching a staff member. And in that case, again, the staff member just says the color, and then the manager is required to kick the person out. And you know, I think what's so cool about the system is that, you know, guests honestly don't know it's being used on them. So it's very customer friendly. It, you know, staff members are going to have all kinds of different experiences, and some people are going to find certain things threatening and other ones won't. And so it allows us to like meet staff where they are and take action. And it's really easy for managers to use. And what we found is amazing is we thought it would just be a way of coping with harassment and just giving us a way to deal with it. But actually what it did is it really nearly eliminated the worst forms of it, because very few people walk into a restaurant and like stick their hand up someone's shirt. But, you know, they will usually start with lower level things like checking them out or making low level comments. And then once things are tolerated, they escalate their behavior. So it just really sort of stopped the problem from happening, and in a way that I think is really respectful to people, right, you know, no matter if they're customer, staff, manager.
And I got to go on record because I'm going to get my sisters, my daughter, and rightfully so, none of it is harmless. I guess just when you grow up in a world where I think women still feel like sometimes you've just got to kind of bite your tongue to kind of get through. And I just want to put it out that any form of sexual harassment, whether it's yellow, whatever color, it's all bad. It's all harmful.
I think what I find really interesting about this color code of conduct is you're giving people language to be able to talk about how they feel and how they feel affected by it. And it's a model that's been taken up by businesses elsewhere as well. Talk to us a little bit about how you're seeing, you know, what you've heard about how the color code of conduct's being used outside of your business.
Yeah, I mean, I've gotten like just fabulous feedback. And actually, you know, one of the most fun parts is there's plenty of people that use it that I'll never know, but I'll walk into a bar and I'll find like one of our posters on the wall. Or like, I went to speak at a conference and it was like all these, you know, bar owners from like across America and the globe. And I was so surprised because at the end of my session, I didn't, you know, I wasn't getting a ton of questions. And I was like, what is happening here? And then I asked people to raise their hand if they had known of the system or if they use it in their bar. And like everyone raised their hand. And I was like, oh, okay, cool. So
I wonder, does it
and
help?
I think people...
This is an industry where there's a huge staff turnover, right? And I wonder how much that's helped towards staff retention at a time, you know, we talk so much about the tight labor markets and we know that hospitality is one sector really affected by that. Has it helped you to keep people, good people, on your staff?
Oh my God, 100%. I mean, to my point about sort of all the tools in the book, right? If we can use them, then anyone can, because I think, you know, something really missing from the conversation right now about the labor market and what to do is that in my experience, the most meaningful things actually don't cost money. They just take time and care, right? Like we are constrained. There's only so much we can pay people when we're charging folks $10 for mac and cheese, right? Like that's just true. It's not going to be the most highly paid job of someone's life, probably. But, there's so much you can do that makes work an enjoyable place to come to and meaningful and purposeful. And I think those are the things, honestly, that, make life worth living.
Are there any of your original team still with you in homeroom?
Oh, yeah, a bunch. Yeah.
So they've stayed on. I mean, it proves that it works, right? One of the things that I really liked about your book and your own story as well is you're talking about wanting to fall in love with work. And do you think that we need to be in love with what we do in order to succeed?
I mean, in my experience, yes. I mean, I'm really smart, and I was working as a lawyer and I got fired, and I don't think it's an accident. I found it very hard to be good at something that I didn't like doing, versus something I'm passionate about. My worst days as an entrepreneur have been better than my best days as a lawyer. But I think it's a real gift, to wake up and enjoy going to work. And it's one I didn't, previous to starting my own restaurant, think was possible. So I guess I just wanted to communicate to people that I do think it's possible. And I try to give them tips and tools for, how to find that passion within yourself, how to pursue it, how to create spaces where other people can too. Because I think, honestly, we spend more of our lives at work than at almost anything else. And if we don't enjoy it, like, what are we doing here?
I would certainly say yes. It's one of the pieces of advice my dad gave to me growing up, like, find something you love to do. And I remember my first job in journalism. I had to be in it like the wee hours, made maybe $14,000, $15,000. Had to borrow money from my father and mother to buy a used car for $4,000 so I could get into New York City because there was no mass transportation. But I knew it's what I wanted to do. And it's amazing, like, right when you find something you want to do. Having said that, you also write, to create anything new of value, you always have to be willing to fail upward, to make mistakes and get a little better every time. This philosophy had worked for you, for me, with everything from adding new menu items to refining management philosophies, but something about experimenting with people's safety at work felt too important to fail upward. That's important.
Yeah, I mean, most of the book is sort of ridiculous stories about, what are the ways that we failed before we found systems that worked. And I was pretty terrified of doing that with our harassment system. But the truth is there is no other way to create something that doesn't yet exist. So we did, and I tried to put in our mistakes so that other people don't need to make them too.
I really enjoyed how honest you were about this, because when you have a non-linear career path and you move in and out of things, it can be difficult to be honest about the stuff that doesn't work. When you've invested, for example, a lot of money in going to law school, that's got to hurt, right? And I wonder, do you take things from your legal career into what you're doing now? Are there elements of what you learned in law school and maybe what you learned from working in the industry as well that are relevant to your job now?
Actually, one of the most helpful things that I took from my legal career into being an entrepreneur was actually how we deal with discipline. I had been really interested in this question because I feel like it's pretty ineffective in most workplaces. And I had worked all through law school at a district attorney's office, actually at Kamala Harris's office when she was DA of San Francisco. But so I was very interested in, like, what are different ways that we approach punishment. And we ended up at my restaurant Homeroom adopting a system that I had seen used in the criminal justice system called restorative justice. So, most stuff at work, when someone screws up, you just get punished. You maybe get a write-up, you maybe get docked shifts, things like that. And with restorative justice, the idea is actually it's not to punish people, but to make it right. And so we started shifting from, like, punishing people when they screwed up to, walking them through this restorative model of figuring out how to make it right with staff, like how to, apologize, like, do nice things, fix it with the customer, help your manager, like, really make it right with all the people affected by their behavior. And It was a real sea change for us. It was really helpful.
Erin, you dropped something like an elephant in the living room. We have to ask you. So you worked with Kamala Harris, or it sounds like you have some experience. What do you think our audience, in your experience with working with her, or dealing with her, or talking with her, that you think is worth sharing?
Oh, gosh. I mean, I do think, she was, I had worked for her because I was really drawn to, she was doing stuff that at the time was considered pretty out there. And, so yeah, I have tremendous respect for her, and, fun that she's running for president right now. So I guess I just say, I think, I really respect that she has tried things that other people weren't willing to do, frankly, at the time. I don't think she gets much credit for that. But she's an innovative prosecutor, and she's good at what she did.
Well, be sure to keep us up to date on what you're doing with Homeroom, especially if you expand it out and grow. And we love talking to certainly small business owners, but your path has really been an interesting one. And thanks for sharing it. Erin Wade, chef and entrepreneur. I guess I can say also lawyer, or former lawyer. Her book is The Mac and Cheese Millionaire, Building a Better Business by Thinking Outside the Box, joining us from Oakland, California.
Okay, let's get to Charlie Pallett now with an update on the day's top stories.
I think, Raj, indeed, lots going on after ours. And we begin with a number of developing stories. The House has enough votes to pass a temporary measure that would keep federal agencies funded when the new fiscal year begins next Tuesday, while punting final spending decisions for the next budget year until after the November 5th election. Earnings news. Moments ago, we heard from Micron Technology, the largest American maker of computer memory chips. It's out with a surprisingly strong revenue prediction for the current period, helped by demand for AI gear after ours. We've got shares of Micron up by 13.2%. As we await the conference call, what to expect, Jake Sullivan is a semiconductor analyst with Bloomberg Intelligence, and he was a guest right here on Bloomberg Business Week.
I think people are going to want an idea. Analysts are going to want an idea of how much revenue they can really generate next year for high bandwidth memory, and how that's going to really impact earnings as well. It'll be interesting to see what management says. We think they'll probably stick to their multiple billions, though.
And a move lower today for the S&P 500 index, retreating from a record as investors ponder the Fed's path of rate cuts and digest housing market data. As for the market backdrop, Alan Zafran is founding partner and co-CEO at IEQ Capital, and he was a guest right here on Bloomberg Business Week.
You know what you know, and you know what you don't know. It's what you don't know that you don't know that's going to hurt you. If things stay as planned, the market is going to slowly continue to work its way up. Most of the valuation increase in multiples has probably been witnessed, but if earnings can continue to grow at a moderate pace, the markets can plod their way higher from here.
10-year yield 3.78%. OpenAI Chief Technology Officer Mira Murati leaving the AI startup, the latest high-profile departure. Meanwhile, Reuters is reporting that OpenAI will remove non-profit control and give CEO Sam Altman equity. Other news at this hour, Alexandria Ocasio-Cortez, one of the highest profile lawmakers in the New York congressional delegation, is calling on New York City Mayor Eric Adams to step down. And New Jersey Transit and Amtrak trains are facing massive delays after a derailment just south of New York's Penn Station. Recapping, S&P down 0.2% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Few headlines involving OpenAI. The CTO leaving the startup, the latest high-profile departure from the company. Meantime, Reuters is out citing unidentified people familiar with the matter, saying OpenAI is working to restructure its core business into a for-profit benefit corporation that will no longer be controlled by its nonprofit board. We've always talked about the structure of this company has been an interesting one, sometimes confusing one. So always keeping us up to date and making sense of it all is AI reporter here at Bloomberg News, Rachel Metz. She joins us now. So Rachel, where should we start? Let's talk maybe, I don't know, what's most important in your mind as you cover this company?
Oh, gosh. I think the departure of Mira Murati is pretty surprising to a lot of people. She had been the chief technology officer at the company and an increasingly visible executive over the past couple of years. She also was very, very, very briefly in charge of the company as interim CEO during the short ousting and the subsequent, before the return of Sam Altman last year. So she's been there through a lot of big product launches, including ChatGPT. And she is one of not that many women that have high-ranking positions at AI companies. So I think it's really, I'm really interested to know more about why she's leaving the company. So stay tuned.
She posted on social media announcing this departure. What sort of details did we have in that post in terms of what's motivated her to move on?
The post didn't really make it that clear, which is probably frustrating to some people. Really what all she was saying was, she's been there, as she pointed out, she's been there for quite a long time. She's been there for 6.5 years. And she said there's never an ideal time to step away from a place one cherishes, yet this moment feels right. She said she wants to take the time and space to do her own exploration. So I'm not totally sure what that means. Maybe that could mean she is interested in starting her own company. Maybe she's interested in doing something else entirely. I don't know. She's been in technology for a while. I mean, she worked at a company called Leap Motion that it no longer exists, but she worked at Leap Motion before she was at OpenAI. So she's been in the technology space for a long time.
All right, so Rachel, layer on top of that the Reuters report citing unidentified people familiar with the matter that OpenAI is working to restructure the core business into a for-profit benefit corporation, no longer being controlled by its nonprofit board. Nonprofit will continue to exist and own a minority stake in the for-profit company. Sam Equity will receive equity for the first time. Sam Altman, that is. I know it's just a report, and we're kind of chasing this, but layer that on top, and what does it tell you about the company?
I mean, I think that we can see that this is a company where a lot of changes are taking place, both in a condensed period of time and also over a number of years. I mean, a lot has changed at OpenAI since the company was formed in 2015. I mean, almost all of its founders are gone at this point, and it's had a lot of executive and high-level employee turnover over the past year, particularly since Sam Altman was ousted and then reinstated as CEO. And I think we can expect that might happen for a while. Some of that, I mean, I've spoken to people about this, some of that's normal at fast-growing startups, and especially a fast-growing startup in a fast-growing field. You can expect that kind of stuff to happen. But some of it also, I think, raises questions about what's going on over there, and who's going to be in charge in the future.
Questions. All right, we're going to be looking more for some of the reporting, and certainly your reporting on this. Our Rachel Metz, who covers all things artificial intelligence for us right here at Bloomberg News.
I want to turn to Washington next. The House passing a government funding bill, short-term federal funding bill, before members, of course, started from Washington for the final campaign stretch ahead of the election as well. The measure approved 341 to 82 in an expedited process. Let's bring in Bloomberg News congressional reporter Billy House for more. Billy, talk us through what's been approved by House members.
So after weeks of wrangling on the House Republican side, Speaker Johnson has managed to basically pass a bill that just extends government funding as it is through to the end of December. He was able to only pass that with more Democrats supporting it than Republicans. So for now, Republicans have managed to sidestep a campaign impacting government shutdown that could hurt their chances. And the measure now goes to the Senate tonight for probable final passage.
Sounds like business as usual, Billy House.
It does. I mean, the Democratic leader in the House, Hakeem Jeffries, pointed out today that 5 times in this session, Democrats have had to bail out Republicans in passing spending measures, or there would have been a government shutdown. It basically reflects the disarray within the GOP, and that would not be a good look heading into the congressional elections just 6 weeks away.
Any of the substantive issues, I mean, there's been obviously a lot of debate about the different provisions being attached to this bill as well. So kind of where are we on the measures that didn't make it in?
Absolutely. You make a very good point. Former President Trump had, in fact, been pressing Johnson and House Republicans to include a measure that would have required non-citizen immigrants to sign up to vote, to register to vote. It wasn't really needed, but it was something as sort of a messaging thing. That got hit by a lot of opposition within the party itself, and so it was thrown out in this simpler measure was what eventually was passed with Democratic help.
So, Billy, so now the clock just starts ticking once again, right, to after the elections. Lawmakers in Washington will be back to kind of figure out the upcoming fiscal year.
Absolutely. I mean, and that'd be a lame duck session, but it'll also be a session where we don't know which party is going to control that chamber, meaning we don't know who will be voted or the likely speaker for the next year. And just weeks before that, before the year ends, these lame duck lawmakers, some of them not returning, others worried about Christmas, will be making spending decisions, and that's what upsets conservatives. They don't think a lot of people will be paying attention.
Fascinating stuff. Billy breaking it down for us. Billy House, he's Bloomberg News congressional reporter there from D.C. All right, we're going to get back to a topic that is something Billy, thank you. A topic that we have talked about a lot in the last 24 hours, it being Climate Week here in New York City. We have the UN General Assembly underway, but climate was a big topic of discussion at our Bloomberg event yesterday, the Global Business Forum, and also the Earthshot Prize Innovation Summit. And we're going to continue that conversation because there's a new study out from Deloitte.
Yeah, right. This is the 2024 CXO Sustainability Report from Deloitte, and we've got Deloitte's Global Sustainability and Climate Practice Leader, Jennifer Steinman, here with us in studio. Great to see you, Jennifer. Thanks very much for coming in to talk to us. This is an interesting time to be thinking about how C-suite executives are thinking about the issue of sustainability, not only because we're looking ahead towards a US election, but also we're in this kind of a very interesting moment economically as well. I mean, what's the kind of top line out of your report? Is this an issue as prominently being considered at that level as it has been in recent years?
Absolutely. It's such an interesting study, third year running, 2,100 CXOs surveyed across 27 countries, and given the backdrop of what we're facing currently, it would be interesting to look at the trend over 3 years, and what we're seeing is that this is still a top of mind priority for CXOs.
What are CXOs?
So C-level individuals.
Oh,
so
okay.
It could be a CEO or
I'm not going to be honest to say I guessed.
Throw in a little bit of jargon there.
I didn't even guess. I'm like, what are we talking about? Okay, so what's interesting is we talk about this all the time, that when certain things get to the C-suite level, whether it's technology, whether it's, we talk about the CFO now, it's not just about earnings reports. The CFO is very involved in strategy. How do we spend money at a company working with the CEO? So you're saying, or whether it's, personnel issues, whether it's equality, diversity. We've seen the ramp up, we've seen the dial down on that. What about sustainability? Do we, has it been consistent, or do we see it kind of waver sometimes depending on the priorities of what the C-suite's all about?
Over the last 3 years, it's been a top 3 area of priority, which is really interesting. So we see it flip-flopping a little bit, but always in the top 3.
Right.
And this year, there were 2 areas that were ahead: economic outlook, which makes sense, and then also technology, and read into that AI and data, some of the topics you've been covering before this. And so those things are integrated, but really high priority. And then the spending, we asked the question, how much are you going to spend on this? Are you going to increase spending?
Right.
This year, up from 75% saying they were going to spend more, we're now at 85% of the C-suite saying they're going to spend more on this topic.
And that speaks very clearly to what sort of motivation these C-suite executives have in being interested in sustainability as well. I mean, is that because they're worried about the impact on their businesses? Is this a reputational issue? What's motivating that increased investment?
There certainly has been that kind of concern from a traditional perspective, but this year, for the first time, we're starting to see a shift. So risk management, very important. Thinking about the doing good part of the equation, very important. Compliance is another topic, with the regulatory environment globally continuing to kind of continue to scale up. But for the first time, what we're seeing is people are starting to see an economic upside. So they're starting to integrate this more deeply into their strategies, core to the business, not what I call a side order of sustainability, but how do we make money doing this?
But this is also a question of, the chief sustainability officer, often somebody not in the inner circle of decision making in businesses as well. The range of people that you're surveying, is this kind of getting to everyone up to CEO level?
Absolutely. We looked at the entire C-suite, so across all industries, effectively, all geographies, a large scan. So this is absolutely something that's becoming more of a C-suite conversation, more of a boardroom conversation as well. And you start to see CFOs taking much more interest, because as we start to look at the regulatory environment, you'll start to see a shift into having to do more around non-financial disclosures as well as financial disclosures.
Well, this is where I wanted to go, because you said top priority, it's an action item, or it's top priority, there's lots of conversations. So there's conversations. How much money, though, is really being spent towards that? I'm just curious where that stacks up when it comes to the expense line on a balance sheet, because I know when we break down earnings of a publicly held companies, I'm not like, hey, look what they spend on sustainability initiatives. That's going to make investors say, oh, I want to own that stock. So help me out here and understand where kind of the rubber hits the road on this?
Yeah, it's a great question because we do see there's an uptick, right? Everyone plans on spending more, but I think you have
And
to
says they're going to spend
Right,
more, but
right.
but it feels kind of hazy and a lot of gray out there.
You need to combine that with things because if you look at other priorities, so one litmus test is where are you going to spend more of that money, and it's going more towards operational issues.
Which means what?
Which means we're getting into the company's supply chain and how are we doing things? How are we working? How are we being more effective? Didn't really hear conversations around effectiveness a couple of years ago. So now they're seeing a potential for being more effective and makes you more comfortable spending money because you think there's going to be a return on that investment. And the other area is technology. So a lot of the problems that need to be solved come through technology integration. And so you combine the innovation and technology language that we're hearing from the CXOs to the increase here, and it's off and running.
How much is regulation playing a part in this? Because, you know, we have the new Corporate Sustainability Reporting Directive in the EU, for example. We know that a lot of EU rules are, you know, the Brussels effect. These things spread around the world as well. Standards are set. Is this a kind of, is the carrot or the stick motivating the change in attitude that you're seeing?
I think it's both. And when you start to look at the regulatory environment, it's quite a bit, and it's a lot for companies to adopt. I was sitting at a breakfast with a lot of CSOs, and there are 14 different regulations that I need to comply with now, but part of it is collecting that information so that we can have better transparency. And then when you have that data and information, you can do more with it.
Well, okay, so a couple things. Sorry, I'm playing like devil's advocate here. But sustainability, I mean, we keep talking about conversations with AI and how it's going to replace workers. Sustainability of a workforce, like, is that coming up among individuals? And then also everybody's spending on AI, ramping up their data centers. That has a huge environmental impact, right? The energy needed to do so. How is that being worked into these conversations?
And you can see from the topic, it's ever expansive. So the greening of AI is required, and then we also need AI to green. So we're going to have to look at those things together, and there's a lot of work that needs to be done as we continue to increase energy consumption around that area. But most organizations are trying to tackle these problems one at a time, and it's really a systemic view that you need to get it done. And that's part of it with the regulatory questions.
What about for workers, though? If we're seeing
for workers, absolutely.
Who may not have a job because technology, you know, we just talked about what junior lawyers, right, are looking at contracts and different things. We had a segment, was it last week? Were you here?
It was here. No,
were
it was
here.
this week. It was Monday. It's Wednesday, Carol.
Monday feels like this is the kind of week it's been, right?
Yeah, what a week, huh?
But I do wonder about worker sustainability.
And it has to be included. When you think about the broad definition of sustainability, workers are included. In the study, we looked at workers as well. We also have another study where we looked at the job impact of the transition. And we need to look at that collectively because jobs are on the line, not just for technology, but sustainability as we look at it. But there's optimism too, because there's so many new jobs being created with the new sustainable economy. And you start to think about not just what are those jobs, but how do you do a just transition so that as many people can have access to those opportunities as possible.
That's the optimism. How much fear is there among C-suite executives about what a changing climate and everything that's coming with it is going to affect their businesses?
Well, it's interesting because we've seen optimism go up, and I actually think